Joachim von Amsberg, thanks very much for joining us here at Asia House. I want to start by talking about your report, the Asian Infrastructure Finance Report, the inaugural one that you released fairly recently. My take on it was fairly downbeat. You've raised a lot of issues that infrastructure spending are going to hit, including geopolitical tensions, trade friction, rising interest rates. What's your take on it? What's the outlook?
So we put this report out, first of all, because we wanted to show the opportunities of investing in infrastructure. And we wanted to show opportunities in investing in cross-country infrastructure in particular. So we put some articles out on the benefits from cross-country rail investments in Eurasia, on cross-country power transmission to allow more renewable energy to be fed into power grids, and the benefits of integration even across continents with Latin America, for example. Latin American Asian trade has large potential. So we want to show potential. And we want to show market participants that infrastructure is a good business, can be a good business. At the same time, we also put some data together to review market trends, to ask whether the opportunities that we're pointing out are really being taken up by investors and project sponsors. And there, indeed, the findings were a little more sobering. We found by aggregating data of project finance in infrastructure in 8 major markets in Asia, that the trend of finance volume actually has been stagnating or even going down in the last 2 years. So that was the somewhat more sobering aspect of the work we did. And at the same time, we think that should be a wake-up call to policymakers, but also to investors, of how many untapped opportunities there are, because there are projects, there are opportunities that could be financed and yet don't come to closure.
Why is there that decline, that softening? Is it because of the trade frictions? Is it because of rising interest rates? Is it more uncertain economic outlook? Or has the industry just failed to mobilize enough capital, private capital, which has been the idea, the big plan, the big vision for several years now?
There's been a lot of talk about mobilizing private capital, institutional capital in particular for infrastructure. A lot of talk about how to unleash the trillions, as the talk has been in many conferences and many papers. But underlying the challenges are still many of these obstacles of why it is so hard to invest in infrastructure. Infrastructure is large, physical, very connected to government regulation. So you still have in most markets policy environment, regulatory environment that makes it very hard to put together good projects. So it is these fundamental issues that don't get resolved overnight, which is why private project finance has not taken off in the same way it could and should take off. So that's where we, I think, want to send a message to policymakers, to investors. There's a huge opportunity. Looking at the investment environment in each market, looking at the regulatory issues, and then at the financial people to ask what are the structures that will allow financing to be brought to scale in a way that hasn't happened so far.
You spoke here a couple of years ago, and I've seen you speak at various conferences, and mobilizing private capital has been one of the key themes of you personally and the AIIB. But what's the AIIB doing about it specifically? What examples can you give of where you are starting to unlock that capital?
So we have invested with our own money $7.5 billion. That may be a large number for a startup, but it's a drop in the bucket compared to the infrastructure finance needs. So whenever we make a loan or invest, we have to ask ourselves, are we able to bring along with us more private capital? Are we mobilizing the capital of others? There are a few things we've done to do that. One is at the project level. We financed gas-fired power plants in Bangladesh, in Myanmar, solar plants in Egypt, and other projects where our participation, yes, brings in private capital because the private banks, the private investors, derive comfort from us being in the deal and providing, in particular, political risk mitigation. But we're also looking at creating markets, new markets, where private capital, and in particular institutional capital, can come in. We're looking at various initiatives to recycle brownfield assets. So take operating toll roads, power plants that have generated revenues already, package them, take them off the balance sheet of the original investors or the banks that have financed them, and sell those assets to institutional investors with diversification, with the scale that is demanded by them. That then allows the commercial banks, the project developers, to go back and originate new projects. So that way, institutional capital can come into a space where they're more comfortable than with greenfield projects, and yet we actually help bring new greenfield investments into being. We have also recently taken $500 million from our capital and put it into a ESG-rated bond fund for infrastructure in Asia. So this is a fund of corporate and project bonds, infrastructure in Asia, that meet certain minimum requirements on environment, social, and governance requirements. The idea is very much to invite others to come along, expand that portfolio, maybe in the end create some index that allows investment at scale and really brings the capital market through corporate and project bonds to a much higher level than it is right now.
I'd like to move now to Italy. And the piece in the FT this morning that Italy and China are about to sign an MOU. Italy would become the first G7 country to sign an MOU on the Belt and Road Initiative. And the AIIB is mentioned in that draft document as being about to lend Italy some money for infrastructure projects as part of Belt and Road. What's the detail?
So I was as surprised as you were when I read this article this morning, because we have not until now looked at any projects in Italy. However, both Italy and China are members of AIIB, shareholders of AIIB, and we're actually quite pleased that they're talking about the use of AIIB for financing infrastructure investments in our member countries. I thought the reference to AIIB as the guarantor of high quality project standards and transparency was a very good thing. So if AIIB's financing can be used to assure that investments are made with high environmental and social standards, high governance standards, transparency, public disclosure, and competitive bidding, then that's a very good thing for us to do.
But just to be clear though, there's no Italian project on your books, or you're not actively looking at one right now?
No, we have not yet looked, and we have no active projects under consideration in Italy. And if Italy or an Italian sponsor was to propose projects to us, we would look at them with the same policies and strategies that guide us in all our investment decisions. These are very technical policies. They're about standards, about the quality of projects, about the returns of projects that we would look at and evaluate, and then see whether the proposed investment meets our requirements, and then make a decision whether or not to go ahead.
Just finally, when you were first here a couple of years ago, you went to great lengths to say you're not the Belt and Road institution. You're a multinational development bank along the same lines as others. You're just smaller, more nimble, newer on the block. Are you still badged? Do you feel you're being badged as the Belt and Road Bank, or have you moved away from that?
Well, it's not surprising that we're often thought of in the context of the Belt and Road Initiative, because both AIIB and the Belt and Road Initiative were initiatives by China, launched about the same time. And yet we have become two very different animals. And the Belt and Road Initiative is an initiative. It's a slogan. It's a motivational slogan for investing in cross-country connectivity, especially in Eurasia. But Belt and Road has no hard boundaries, no fixed rules, which is very different from AIIB. We have a legal charter. We are a multilateral development bank with contracts and very hard boundaries. So we explain that whenever the opportunity arises. On the one hand, we want to make use of good investment opportunities in Belt and Road or elsewhere. At the same time, we want to make sure that our project quality standards, transparency standards, debt sustainability standards are met in any projects that we are financing. And I think that distinction is increasingly becoming clear in the market and even to the broader public.
Joachim von Amsberg, thank you very much for joining us.
Pleasure to be here.